Howdy, Dave here, Hidden Freedom Investing, and today I have an important update from FUNDRISE. Basically, they put a message out just a few days ago, and it's basically talking about the economic hard times that we're in right now. So let's go ahead and jump into the update here in a second. Before I do that, I just want to let you know that all references of the CV-19 or any other way it's pronounced, COVID or anything like that, is going to basically be replaced with beer virus. Okay, so and that's just for YouTube, because YouTube doesn't seem to like the real words for it for whatever reason. So everything that is in this video will be all referenced by that. So let's go ahead and jump into what their message is.
Hi there. Today is Friday, April 3rd, and we're sharing the audio version of a letter that we recently sent to FUNDRISE investors. It's worth noting, though, that the letter itself has several accompanying graphics and tables which may add helpful context and, unfortunately, don't translate well via audio. For the full reading experience, feel free to visit fundrise.com/education, or if you're a FUNDRISE investor already, simply check your newsfeed. Thanks for your time. Less than 30 days ago, we sent a letter to all our investors describing our concerns about the emerging
Beer virus
global outbreak. Since then, it's been a sobering experience to witness how quickly the world has changed. At that time, the US had approximately 1,000 known cases of
beer virus.
As of this writing, there have been more than 245,000 confirmed cases reported. It's difficult now to remember that even then, many people were still skeptical about the potential scale of the outbreak, and most couldn't imagine the prospect of America's major cities going into lockdown. But here we are. Today, we suspect that there's not a single one of our investors who has not been directly impacted by this pandemic in a significant way. It's important to reiterate a point that we often make when sharing these types of letters, which is that our goal here is transparency. We don't attempt to predict the future, nor do we believe that we're always right in our assumptions. We do, however, believe that being transparent in our thinking and the resultant course of our actions is imperative. To that end, we want to walk you through the details of how we believe this situation will continue to unfold and the critical steps we're taking as a result. We aren't scientists, nor do we believe that anyone can truly feel confident today forecasting the near future. But as investment managers, we have a responsibility to prepare for a wide range of outcomes and rely on the data to help us make the best decisions possible for our investors. Though painful to acknowledge, we believe the evidence suggests that we're still on the upward slope of the curve when it comes to the spread of the
Beer virus
across the country. As the case count continues to rise and stories of overwhelmed hospitals become more and more frequent, it's difficult to imagine that many people will not shift towards more genuine panic. We believe that this period of panic will reach its peak somewhere between 2 to 6 weeks from now, the exact timing being somewhat dependent on locale. Yet, as more cities and states fully embrace the need for shelter-in-place mitigation, we also believe that cases will eventually begin to taper. What remains unknown is just how long it'll take for these steps to actually bring the virus under control and what the new normal looks like then. It's not unreasonable to assume that we won't be able to return to a world more like what we knew
beer virus
until a vaccine is developed, which even in optimistic scenarios is likely a year off. What's so different about this crisis that many others have also identified is the fact that the keys to combating the outbreak itself simultaneously act as massive brakes on the broader economy, like trying to bring a high-speed train to a full stop in only a matter of seconds. This kind of universal emergency shutdown is creating an extraordinary and unpredictable cascade of negative side effects. The big question, which no one knows the answer to, is if this domino effect of having to close such a large number of businesses will lead to a prolonged recession or worse. At more than $21 trillion in annual gross domestic product, shutting down the entire US economy for only a few months could mean such a huge loss in output that even the unprecedented combination of the $2 trillion congressional stimulus package and the Federal Reserve's promise of unlimited quantitative easing may not be sufficient to restart the metaphorical engines. There's simply no on-off switch for the economy. Given our ongoing concern that what started as a health crisis will spread into a liquidity crisis, followed by a credit crisis, and ultimately end in a recession, the next logical question is, well, what does this mean for my FUNDRISE portfolio? In short, we've spent the last several years building the broader FUNDRISE portfolio and, by extension, the many unique permutations owned by our community of over 130,000 individual investors to be a fortress specifically designed to withstand this type of severe downturn. We view each property that we collectively own or have invested in as another brick that's been carefully laid by hand to form a secure barrier. And the dollars that we hold in reserve are the stores of grain, meant to ensure that our entire investor community can endure a long, harsh winter. Up until now, our singular focus has been on acquiring assets that we believed would outperform during a period such as this. At times, we've looked smart when the stock market crashed and fears of a potential recession started to surface. And at times, we've looked foolish when the stock market rallied and the prospects of endless prosperity swept over the country. But regardless, we kept at it, unwilling to compromise in our convictions. We've also been intentional in telling our investors what we were doing, sending the same letter to every single person who's ever invested with us. Quote, "We consistently seek to make sound investments with strong fundamentals, even if it means being slightly more conservative in our approach than others around us. We focus on the intrinsic value of the real estate, choosing to invest in areas with high barriers to entry and at prices that are at or below replacement cost, i.e. below the cost to construct a new building or similar quality. We believe strongly that if we invest in markets with stable or rising demand and own properties at a lower cost basis than our competition, then over time, our investment should experience stronger than average performance, even if the market goes through a downturn." End quote. Today, the result of that work is a portfolio which is more than 80% made up of rental apartments and residential senior loans, an asset type that we've stated before we feel is likely to be one of the best performing investments during this crisis. In addition, virtually all of the remaining 20% of the portfolio consists of mixed-use property investments located in major urban markets, owned 100% equity with no leverage, an approach we also believe is one of the lowest risk options available today. Lastly, the portfolio also has roughly $175 million of cash reserves, our grain stockpile, currently held in government money market funds. In total, from a risk-adjusted return standpoint, we believe the portfolio is as well positioned to be able to sustain a severe economic downturn as any other investment asset with which we are familiar. To substantiate this belief, we've spent the last few weeks conducting an in-depth analysis of every single asset in the eREIT and eFund portfolio, 213 in total, and stress tested them against an extreme downside scenario, a forecast period where stabilized multifamily apartments experience more than 30% economic vacancy for approximately 12 months. For reference, this is approximately 3 times the amount experienced during the financial crisis of 2008, which, according to the Federal Reserve, peaked at around 11.1% nationwide. As evidenced below, we believe that even under this scenario where we experience greater distress than in the Great Recession of 2008 to 2009, nearly the entirety of the portfolio would still be able to perform with little to no principal risk, assuming that a minimum $50 million of our $175 million cash reserve was available to either cover potential operating shortfalls, continue with development that's already in process, make debt paydowns, or, in the very rare instance, step in and take over as manager of the property. Of course, while we believe the assumptions made in the stress test analysis are extremely severe and ultimately unlikely to occur, we can't guarantee how the future will play out. Fundamentally, FUNDRISE investors own real property, which is simply not liquid. Fulfilling redemption requests in today's environment would mean either substantially depleting vital cash reserves or, even worse, potentially selling assets into a down market, and likely at a price far below actual value. As highlighted above, the availability of cash reserves is a critical piece in our stress test scenario of an extreme downturn. Having lived and invested through both the 2001 and 2008 recessions, we've learned that no matter how strong the quality of your assets, the ability to make additional capital infusions when necessary is an indispensable element in successfully navigating unexpected economic shocks. Therefore, we've determined that it's necessary to suspend redemptions across all our mature eREITs and eFunds. Some may question why, with such confidence in the portfolio, could we not use a portion of the cash reserves to fulfill existing redemption requests? And the answer is that we strongly believe choosing to reduce cash reserves or sell assets at this time would cause a material increase in the risk of unnecessary loss or otherwise avoidable problems for the vast majority of our investors who intend to stay invested for the long term. Time may prove that our concerns about the severity of the downturn never come to pass. However, there's a legitimate possibility that this pandemic unleashes the greatest threat to our economic prosperity since the Great Depression. In such a world, the liquidity reserves held at the funds would become the safeguard that protects our investors against the threat of meaningful losses. Although we've made significant efforts over the years to communicate that this type of suspension was an eventuality that comes with the territory of investing in real estate, such as including the following statement in the aforementioned letter about what to expect from us during a financial crisis. Quote, "While under normal market conditions, we seek to provide our investors with liquidity through the redemption program, during a financial crisis, investors should expect us to pause the program to allow enough time for whatever events may unfold." End quote. We're mindful of the fact that this will ultimately be a difficult and unpopular decision for the relatively small portion of investors who have an outstanding redemption request at this time. We know that there will be those investors who've been disproportionately impacted by this pandemic. Some may have been recently laid off and are seeking to redeem their funds to help pay for critical expenses. Telling that individual that we can't process their redemption at this time will be, without question, one of the more difficult conversations we've had since starting the company. However, as manager of the funds, it's our obligation to put the interests of the entire investor community first. We could not, in good conscience, make a decision that was directly in conflict with the framework we've provided every investor as to how we would act in such a scenario. Nor could we give preference to the small percentage of the investors seeking to redeem today and risk not having access to those critical cash reserves in the future. Again, to protect the vast majority of our investors who intend to stay invested for the long term. We truly hope that over the ensuing weeks and months, it proves out that we were, in fact, more conservative than necessary. That would mean the virus was subdued quickly and economic conditions could return to a more stable state. In such an event, we would most certainly return to normal operations and once again resume fulfilling redemption requests. But while we hope for the best, we must plan for the worst, which means not delaying the hard decisions just to spare ourselves tough conversations. Since starting the company, our mission has always been to treat every individual investor with the level of respect and transparency that a professional investment manager would demand. Rather than assume individual investors were not sophisticated enough to understand the world of alternative investments and therefore shouldn't have access to them, we set out to provide our investors with the same type of investment product that had traditionally been reserved for only the largest institutions, and then gave them the power to make their own decisions through a user-friendly digital experience. The result is that today, FUNDRISE investors are arguably able to own real property in a more direct and low-cost way than was previously ever possible. But it also means that collectively, in times of financial crisis, the Fundrise investor community is agreeing to forego individual liquidity in order to maintain shared stability within the portfolio and preserve value for the whole. Unlike in the stock market, where you're alone in a zero-sum competition against thousands of financial services firms and their software algorithms whose purpose is to make money for themselves at your expense, Fundrise exists to direct the collective force of over 130,000 individuals into one cohesive actor, providing our investors with the power and opportunities that otherwise only exist for the billion-dollar institutions.
Beer virus.
As we've shared many times before, our loudest skeptics have always told us that our fatal flaw would be that in a time of financial crisis, the individual investor would panic, attempt to liquidate their shares, force us to sell assets, and in the process, drag their fellow investors down with them. We've waited for almost 10 years to prove them wrong. Going forward, our more mature eREITs and eFunds in which redemptions have been suspended will also pause accepting new investments. These funds were raised and deployed in the
Beer virus.
world. And because we believe that the panic from the
Beer virus
outbreak will still get worse before it gets better, our immediate near-term focus for these funds will be on shoring up existing assets and moving forward with those projects that may specifically benefit from continuing to make progress in today's environment. At the same time, for those investors who continue to invest for the long term, new investment dollars will go into new funds that will raise and deploy into strategies tailored specifically for the
beer virus
world in which we live in today. While much of the real estate market is frozen as the country moves from a state of panic to broader acceptance of the hard but necessary steps to quell the outbreak, we expect that the current extreme levels of uncertainty will give way to a relatively more predictable period of contraction. Eventually, as the fallout from the extended nationwide shutdown works its way through the economy, we believe that new and attractive opportunities to proactively deploy funds will begin to present themselves. And further, that our diligence in maintaining sufficient cash reserves will be rewarded, as many of the large incumbent financial institutions will still be wounded and vulnerable. Such a world may set up perhaps the most poetic response to our skeptics, who may have to sit back and watch as we and our investors are proven to have in fact been the more disciplined group and, as a reward for our patience, collectively go big game hunting. Till then, onward. Thanks again for listening to this recording by Fundrise. If you have any questions or concerns, please reach out to us at investments@fundrise.com.
All right, so that's an interesting update from Fundrise. Basically, back in January, they talked about this in their end of the year newsletter or, investor update. And I did a video on that. If you want to look at one of my other videos, link it at the top over here. And I kind of talked about it, and they talked about it, saying, hey, we could suspend redemptions at any time, to make sure that, the investors are all protected, not just to, provide liquidity to certain investors. They're looking out for all the investors and the whole platform together. So, they basically state, hey, this is a 5-year investment minimum. So hopefully people that are watching this video, you didn't get into Fundrise thinking that you could get out of your account, within a year or two or something like that. Or hopefully you didn't have any pending redemptions, because all those been suspended as well. So I don't believe that we're going to, take a loss on anything like that. They're just making sure they're being a little conservative. You can look at the video and see the stress test results and all that. So I don't think, there's going to be any danger of losing money or anything like that. But I would say that the returns are going to go down a little bit. And I just say that because, some of the newer offerings they have are not invested in anything right now. I think they're kind of holding off on new investments. They are stacking money up for those new investments, but they don't think they have invested anything, because my active investments down here are showing 148 right now. And, a couple of items have been paid back and nothing has been reinvested. I actually just recently put some more money in, a couple of recent ones actually. So I did this investment here into this income eREIT when it was still open. That income eREIT is now closed. You cannot invest any money into that at all. Now there's a couple other new ones that they have, and this one of the new ones is this income eREIT 5. So I invested $66 in that just recently. So I am actually sticking fresh capital into this platform. So if we look at the offerings page here, and I've talked about this in other videos, and go ahead and take a look at the FUNDRISE playlist and kind of talk about this offerings page. But I was trying to invest in a lot of these incomes. The income here is an income here because I want to get higher dividends and kind of reduce that equity a little bit. But if we look at this one right now, you can kind of see that it is actually closed and it's not open for new investments at all. So right there we'd have a invest in this this fund option, but we don't have that anymore, so it's not available. So, and let's just look at some of the newer ones here that they have. So they opened up some newer ones here, income REIT 6, income REIT 5, and we've got some growths in there as well. But these ones are open right now. That one's coming soon. There is another one that they have. Let's see, this one right here. And this one says, look at that, direct investment. So you can invest in this one right now, and I am investing in some of these new ones. Now, granted, you're not going to get any return on that money probably anytime soon. They're ramping up. They don't even have any projects assigned, so I'm sure they have some in the works, but at this time, if you're going to do a direct investment, that money is just going to be dead money for a little while. So we'll go ahead and end this video here. If you have any comments, questions, or concerns, go ahead and leave a comment below, and we'll go ahead and do another update here in April in a few weeks when I get my actual dividends and all that. So we'll do an update on the account. But for now, go ahead and please like and subscribe, and we'll see you in the next video. Thanks for watching.